But how about that crazy pop yesterday? Let's zoom in on the action. The VIX jumped from 15, this isn't accurate, you can see the minutes here, from 15 to nearly 18 at its highs before pulling back to 1644 at the close. Rather than freaking out about the spike, though, Sebastian wants to put it in perspective. First off, whenever we come off a long weekend, did you know this? The volatility index experiences what's known as the weekend effect. All else equal, that makes it rally about 0.8%. On top of that, the S&P 500 sold off yesterday morning, which is when the VIX jumped the most, precisely what it's supposed to do. When the S&P recovered most of its losses, the VIX gave away most of its gains. Reasonable, rational, normal. So when we finally get a sustained sell-off, Sebastian likes to look at how the volatility index is moving in comparison to the market. So now I want you to check out this pair of daily charts. The first is the S&P 500, and then it's over the VIX, okay? S&P 500 and the VIX. When the market rises and the VIX goes up along with it, that usually means we're approaching a top. Surprising, reliable signal. Remember, they call it the fear gauge for a reason. When the fear keeps climbing even as stocks rally, that tells you something is wrong. But what happens when the S&P jumped to a new high in recent weeks? Well, look at this. From June 22nd to July 2nd, the S&P advanced 106 points. Was the fear gauge rising along with it? No. The VIX was going lower, just like it's supposed to when the market rallies. Over the same period, the volatility index fell from 16.66 to 1507, briefly dipping to the 14s. In other words, the market accepted that rally. There was no spike in fear. As long as the VIX goes down when the S&P goes up, Sebastian says that the rally is likely to continue, that it's a strong one. And there's no reason to panic about yesterday's VIX spike because it happened when the S&P was going down. We know what it looks like when the volatility index rises along with the market, because that's what happened in April, okay? This is right before the S&P got slammed. But that's not what we're seeing now. You can see this thing goes up, and then it predicts the decline. Sure, there are a lot of potential risks. You know I am so concerned about China. It actually kept me up last night. I'm concerned about because I'm worried about this Joe Stalin thing. I'm concerned about the signals from the bond market. There are all sorts of ways this market could be derailed. But the bottom line, the charts as interpreted by Mark Sebastian, suggest that the S&P 500 is headed higher, that Jimmy Chill's got to chill, and the negative trends I pointed out at the top of the show, at least some of them, shouldn't lead to anything too frightening. Yesterday showed us that the VIX can give us a quick, violent move higher when the market sells off. So there's some fear lurking, but that fear vanishes when stocks go up. For now, Sebastian says, that's what really matters.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.